Welcome to Cross-Border Tax Talks, where we discuss the latest trends in international taxation, from U.S. tax developments to the OECD's Pillar 2. I'm Doug McConey, PwC's International Tax Services Global Leader. Check out PwC's Policy on Demand news platform that provides in-depth insights and analysis on tax policy developments. Policy on Demand is now available for free at policyondemand.pwc.com. On this week's episode of Cross-Border Tax Talks, we're back in Westminster Studios in St. Louis, Missouri, where I'm excited to be joined by Kate Miller. Kate is a director in PwC's Tax Reporting and Strategy Practice. PwC's Tax Reporting and Strategy Practice is a global practice that utilizes data, process, and technology to redesign, redefine, and redeploy clients' tax functions. Kate has spent a significant amount of time focusing on the operational and data aspects of Pillar 2. Kate, welcome to the podcast. It's great to have you on.
Thanks, Doug. Excited to be here.
So we've been spending a lot of time together on Pillar 2 and educating me on operational readiness, which we'll get there. But before we dive into this, I wanted to ask a little bit about your career background, because It is maybe a little non-traditional. So you started your career in public accounting, and then you went into industry for, I think, roughly 5 years.
Yep.
And then about 5 years ago, you joined PwC. Tell me a little bit about how that experience was in industry, and how did it really inform your role now as an advisor, now that you're back on the advisor side?
Yeah, definitely. So I think what it gave me the most was perspective, really understanding what it's like to be on the industry side and have to deal with some of the politics and some of the challenges that folks face in tax departments within companies. I remember back when I started my career in public accounting, I spent a lot of time on financial statement audits. We would send out an info request to the client, and we would always complain that it would take so long to get information back, and we never understood why. When I was actually sitting on the other side of the table, I finally got that understanding and appreciation for why things aren't always as easy as they might seem.
Yeah, and I think, I don't know, I've been on the advising side my entire career, and I think one of the things, we've learned a lot here with Pillar 2, but one of the things that, frankly, I'd never really spent a lot of time on as an international tax advisor is really the front end and the data and some of the systems stuff. And certainly, growing up early in my career, did plenty of compliance, but never really thought about, what are all of those processes? Where is data sourced? Just really understanding the process of data. And so I'm excited to have you here today to talk a little bit about that, to talk about the PwC's data input catalog that has recently been published, and really learn more about operational readiness. So before we even dive into some of the subsets, can you help explain to our listeners what is operational readiness? What are the operational aspects of Pillar 2? Because a lot of us just think about the rules and calculating it, but what does that really mean?
Yeah, so the way I like to think about it is there's the Pillar 2 legislation itself and the policy behind it, but then there's the operational side, which is what companies actually need to do tangibly day to day as part of their processes going forward with respect to the additional Pillar 2 obligations. So the way we like to think about operational readiness is really in 4 different pillars, for lack of a better term. People,
no pun intended.
No pun intended, yes. People, process, technology, and data. Who are the people that are going to need to be involved in this? What does that cross-functional group of stakeholders look like within tax and outside of tax? What is the process going to look like? So if I were to build out a work plan and step by step, what am I going to need to do all the way from starting from data gathering through producing a result that goes back into my provision, getting numbers onto forms? The technology, what technology am I going to use to enable this process? So what software do I have in place, both within tax and outside of tax? So thinking more broadly around enterprise systems. And then, of course, last but not least, the data. What data am I going to need to perform these calculations? What data am I ultimately going to need to report in my financial statements, on my tax returns in the different jurisdictions? And how do all of those come together in one integrated, cohesive process so that I'm actually able to execute what the rules of Pillar 2 are saying?
That's very helpful context. And I think one of the things that's challenging for policymakers, and, several weeks back we had Pascal Saint-Amand on the podcast, which was, great to hear directly, from the person that was really kind of involved from the inception. But I think one of the misconceptions that maybe he expressed during the podcast, and we've seen from other policymakers, is that getting this data and doing these calculations can be automatic. And I've heard that term used before. And I think one of the things that, I've learned a lot, certainly as we've been going through this journey, is that none of this is automatic. First of all, this is an entirely new set of books, but that there may be layers of different types of technology that are needed to, first of all, where do you, and we'll get into some of this, but like where do you source the data from an ERP system? Are there other tools that can be used to then organize the data in the form that we need? And as you know, sometimes there's multiple different tools that are needed to be able to organize the data in the form that you need. And then when you get to that, what we refer to as the data input catalog, which are the data points that you need to actually do the calculation, then there's what we refer to as the back end, right? The front end is getting the data. The back end of the calculation is actually doing the calculation itself. And then that, to your point, we've exhausted a lot of oxygen on the Cross-Border Tax Talks podcast talking about those quantitative aspects and how the actual rules operate. But I think what we've seen, as taxpayers really start to prepare for this, is that they want to understand what where the issues might be. So, one common one that we've talked a lot about is the U.S. potentially below 15% because of the incentives. And client and taxpayers want to do the math, but then all of a sudden it becomes a question on, well, where do we get the data?
Yes.
And then I've got to pick up the phone and talk to you. So let's start with a discussion on data, because I feel like everything, like you try to talk about these other aspects, but ultimately we end up with a discussion of data. So what have companies been the most interested in with regards to data and systems analysis with respect to Pillar 2?
Yeah, for sure. So I think where a lot of our conversations begin is just with, what are all the data points that I potentially am going to need for this calculation? So now users will have access to the PwC data input catalog, which is a great starting point. And I think it will give companies the perspective of exactly the vastness of the data that is potentially needed. Once they understand that, then moving into the applicability to their particular profile, and also understanding where that data is going to be sourced from, and also sometimes even more importantly, who owns that data. And I think that's a key thing to point out here, is that a lot of the data needed for the calculation actually is owned outside of tax. So this touches into the people component of this, where tax folks are going to need to coordinate with controllership, FP&A, legal, many other stakeholders in order to make sure that they're understanding properly the sources of the data, making sure that data is correct at the level of granularity needed for Pillar 2 calculations, and to make sure that they can rely on it.
Yeah, so to provide the listeners just a little bit more information, PwC recently published a data input catalog with roughly 230 data points that are needed per constituent entity. That's per constituent entity. This is more detail, but it does tie to the data listed in the Globe Information Return. And we talked about that Globe Information Return, which was really more of a list of data points. And that Globe Information Return was published by the OECD in December. So a link to the data input catalog can be found in the show notes to the podcast. So let's go back. And so, there's a lot of information in that data input catalog with respect to who would the typical data owner be, the data points versus calculation. But maybe kind of related to that is systems. I think that there's a misconception, sometimes from policymakers, sometimes from even taxpayers and advisors, that everything can be found in the ERP system. And what is your experience? Try to help listeners understand that are just starting the journey of where is that information actually found that you need to do the calculation?
Yeah, that's a great point. And I think sometimes some of the confusion that I hear is that folks are talking about technology that will help to enable executing the Pillar 2 process versus a true calculation engine. So your ERP system, that will be a source of data that can be fed into a calculation engine, which will then, based on the legislation as it's adopted in the different jurisdictions, actually perform the calculations and the allocation of tax once it's calculated. And then ERP systems will be that end of that feedback loop, right? So there will be, it's a data input source, and then it will be a recipient of data on the back end to the extent there's adjustments that will need to be booked back into this, fourth set of books.
Right.
But it's not the only source of data. There's still data that's going to come from your tax software. There's still data that's going to come from work papers. There's data that's going to come likely from HR and payroll and legal. So what we're seeing is that the data does not all exist in one place, and I think it's going to be very difficult to get it to exist all in one place. And so the key is really to think about what is that inventory of data sources? Is it providing me what I need? And how will it feed into the technology that I'm going to use to enable the process and ultimately my calculation engine?
Yeah, I mean, I think that, based on some of our initial analysis as we look at the data input catalog, it was something roughly 60% of the information can be found in an ERP system. And again, I think that a lot of folks think that, well, this is just all within the ERP system. And, one of the other challenges that we've seen is that some of this data just doesn't exist at all. So for example, oftentimes for US GAAP taxpayers, where things consolidate out, there may not be that kind of level of detail on a constituent entity by constituent entity basis, kind of that separate set of books for a constituent entity in a particular jurisdiction, because things consolidate out. And so it requires then companies to understand, all right, well, what data could potentially be found in an ERP system? What needs to be calculated, or what needs that doesn't exist that we need to exist? And I think that has been a big challenge and a big surprise for taxpayers.
Yeah, for sure. And I think as we have been working with a lot of companies to go through their operational readiness and then even actually leverage calculation engines, right, to perform the calculations and see what the results are, getting an understanding of, if you have an elimination entity in your ERP system, right, in your consolidating trial balance, if you have a topside entity in your provision configured in your provision software, and so that's coming through, all of those adjustments on all the data in there needs to be allocated to the appropriate constituent entity. So where are we going to get that detail from? Who do we need to talk to? Is there another report that actually exists today? Or do we even actually need to go all the way upstream to look at how transactions are being recorded and potentially think of, is there additional master data that needs to be tagged when transactions are recorded in the ERP system or in subledger systems, and how that will ultimately come together? So there's really a lot of work that needs to be done, even for companies that think, oh, I have all this data. I know it exists. It's sitting in my ERP system. It's sitting in my tax provision software. Okay, maybe, but let's take a look at what that means in the context of these Pillar 2 calculations and answer the question of completeness. Do we really have all the data that we need in a format that we can just, streamline and feed into our calculation tool?
Right. So, obviously I spent a lot of time on the calculation side and the back end of the process. But maybe you can explain to listeners the benefits of doing the data analysis in conjunction with running calculations and modeling the impacts of this. Because I think sometimes, taxpayers may be inclined to keep those exercises separate or do them separate. And I think we've learned the hard way of why it's so important to do it together. But explain what we've learned.
Yes, absolutely. We've learned a lot over the past few months in going through these exercises. So what I've found is that as part of, an operational readiness assessment, you can go through the data input catalog. You can extract the data from your source systems. You can take a look at it and, think to yourself, okay, it looks like I have everything I need for this particular adjustment. I think I'm going to pull it from this account. For this adjustment, I'm going to pull it from here. I think I'm in good shape. No issues with my data. When you actually run the calculation and look at your potential top-up tax exposure by jurisdiction, and you look at how you get from net income to globe income by jurisdiction, when you put the lens on it of, I'm familiar with my jurisdictional profile, I'm pretty familiar with my data, I have an expectation in my mind of what my results are going to look like, oftentimes people are surprised at what comes through in the calculations. Right. And when you investigate that a little more, sometimes it could just be a result based on, the profile of a given taxpayer. But oftentimes what we're seeing is it actually comes down to a data or a data mapping problem. Is an adjustment being allocated to the appropriate constituent entity? Are taxes being booked on a branch when they shouldn't be? And that's giving you a weird result in a jurisdiction where you're not expecting top-up tax, or you are expecting top-up tax and you're not seeing it come through. So I like to think of the impact assessment and the actual modeling almost as a diagnostic tool.
I agree.
For the completeness of my data, because it could all look great on paper, but when you actually run the numbers and you get those results, sometimes, you can be in for a little bit of a surprise.
There's an expression, I think, that we use: garbage in, garbage out. And the problem is you don't know if it's necessarily garbage in until you run the numbers and do the calcs. And so I would highly recommend that as part of the process. Obviously, getting the data and everything organized takes a considerable amount of time. But the fact is once you do it, that's not the ending process. You need to make sure you run the numbers to try to find those anomalies.
Exactly.
And sometimes the anomalies, maybe it's just some big book tax difference that was an anomaly one-off that caused, some particular issue, or maybe it was a fundamental data issue. But ultimately running the calcs for each of the constituent entities allows taxpayers to identify what those issues might be and whether it makes sense or it doesn't.
Exactly. And as taxpayers are also thinking through how they're going to remediate some of the gaps in the data and systems, as they are working through and remediating them, running the calculation and performing the modeling as a test, right? You ultimately want to test that what you're building and what you're remediating is producing the result that's intended and desired. So really keeping that as a work stream that's almost running iteratively throughout your Pillar 2 readiness process.
Right. And it's spring of 2023 when we're recording this, which is hard for me to wrap my head around.
Yes.
But for most multinational organizations, assuming that the IASB agrees on period accounting, the FASB has already said period accounting with respect to Pillar 2, it's for companies that are operating in a jurisdiction that have an income inclusion rule, or potentially, we'll see what happens with Korea, but if they have a branch or a constituent entity in Korea, the undertax profit rule may theoretically kick in after, or not even theoretically, is supposed to kick in absent any changes to that timeline. But it's really going to be that first quarter of calendar year 24 for those calendar year taxpayers that there will need to be some form of disclosure for financial accounting purposes, right? And then the compliance obviously is not going to be required until a year after that. And that's, again, only for companies presumably that are subject to the income inclusion rule or otherwise might be subject to the undertax profit rule. But companies need to start working backwards, right?
Exactly.
From there. And the amount of data that is required and the stuff that is, out of system, as I think you guys call it.
Yes.
That needs to, I'm speaking the language now.
Yes.
That needs to be gathered to be able to do the calculations. It's important that companies start early. So how can taxpayers leverage the data input catalog and really trying to prepare for Pillar 2 and kind of working backwards from that? All right, here's the first time I may have to disclose a number for financial accounting purposes.
Yeah, great question. So as we were talking about before, there is no magic button where you're going to be able to press it and all of the data is magically going to come together and you're going to get a result. So taking the data input catalog and leveraging that as a starting point for just understanding the volume of information that you're going to need. The input catalog is developed based on the OECD model rules and commentary, several hundred pages of guidance from the OECD. So when you have a global network of firms that are leveraging that, reading it, analyzing it, and putting together the data input catalog, we have the volume of individuals at our benefit to prepare that. So most tax departments, even though they may be very familiar with the Pillar 2 rules, I don't think they've gotten to the point where they understand really the depth of information that's needed. So leveraging that and starting to take the point of view of understanding what may or may not be applicable based on the particular industry that the taxpayer is in, based on their jurisdictional profile, the type of credits that they may have, the type of book tax differences that they have, and start kind of putting those in categories of, all right, this is data that's owned outside of tax. This is something that I'm probably going to get from my ERP system. This is data that's probably tax owned, so on and so forth.
This is data that it doesn't exist, that needs to be either calculated or found, right, or developed.
Exactly. And I think that's another common thing that sometimes catches people off guard, just the amount of new processes that will need to be stood up in order to comply with Pillar 2 that are processes that don't exist today, right? So it's not just gathering the data, but the process around gathering the data and standing up new processes as well. And so taking that data input catalog, getting an understanding of who my cross-functional team of stakeholders might need to be that I'm going to have to get involved in this process, and then really start understanding the underlying rules behind each of the data points, right? So this is where there's a bit of a heavier lift. You have a list of data points, which is great, but understanding what each of those data points means in the context of Pillar 2 is going to be an additional effort, and understanding how those data points and the rules fit in with a particular taxpayer's profile. It's going to be a heavy lift, and as you said, you don't want the first time you're going through this exercise to be Q1 2024.
No, certainly not. So you mentioned kind of people and orgs there as far as the stakeholders that are needed to just do this calculation. I say do the calculation to get the data that is needed to even start the calculation. So maybe my first question is, who do you generally see as taking ownership of the Pillar 2 calculation? Is it somebody in international tax? Is it somebody who does the provision, compliance? Well, what are you seeing as trends with respect to kind of who's owning this process within an organization?
Yeah, so every company has been approaching it slightly differently, but in general, what we're seeing, for multinationals is that wherever the consolidation process sits is generally where the Pillar 2 ownership is going to sit. So I've seen generally a combination of folks in the international tax space and the provision and ops space kind of coming together to form a little working group within tax, because there will likely need to be interplay between the two. Whoever's doing the consolidation generally has a good understanding of how the information from the different jurisdictions is actually coming together. So that's really critical in this process here, and understanding how that data will come together from the different jurisdictions going forward for purposes of Pillar 2.
It's a cross-functional team that frankly maybe has not operated as a cross-functional team historically, because we've never had a global tax system. I mean, this is really a novel concept and a new process. And frankly, I think we've even seen within our organization, the teaming across various different experts, including in getting accounting teams and with all the deferred accounting. I mean, it's just it's a new group of stakeholders that maybe historically has not worked a lot together, whether you're an advisor or you're a taxpayer, and it's getting those people together. What are you seeing are you seeing any trends as far as allocating resources? And because you need, there's a bunch of people that are generally required, as you mentioned, but any trends from how resources are being allocated? And it's tough to find talent out there, I know, for both taxpayers and for advisors that, it's do more with less. But what are you seeing with on the allocation of resources for this?
It is, yeah. So unfortunately, a lot of the companies I've been working with, they're not going out there and looking to hire a head of Pillar 2 tax, at least not yet. Maybe in the future, that's going to be one of the trends. But the way that we've seen it is generally someone needs to take ownership for the overall process setting things up, right? There's going to be multiple different stakeholders, multiple different work streams. So having one individual spending a chunk of their time actually coordinating those efforts and making sure different work streams are integrated and people are talking to each other that need to be talking to each other. We also see now an increased emphasis on tax technology roles. So to the extent that there is a tax technology person within a tax department, we've actually seen a lot of this work be pushed to that resource, where they may even be dedicating 50% to 75% of their time to Pillar 2 readiness efforts, from here through stand up of the process in Q1 2024 and even beyond that.
Which makes a lot of sense to me, because one of the things that you had mentioned earlier is once you get the data, how do you transform it into the form that we need to effectively feed the data input catalog, or to actually feed whatever calculation engine that you're going to use.
Yeah, exactly. So finding resources that have a good comfort with technology, but also have a background in tax and understand the tax technical components of this is really, really critical to be able to merge those two and be able to understand the rule and apply it to how the technology needs to actually be configured.
Right. And I know it's challenging to try to build those accelerators, is what we've called them, to get the data and then to try to transform that data. And so having that tax technology background or having a technology background and data background along with the tax background is very powerful.
Exactly.
It's something for some of our younger listeners that are students. I think there's a big future in that, in the industry, for advisors, whatever, but having that accounting knowledge and the technology and the tax could really a powerful background.
Yeah, absolutely. And even being able to translate tax requirements to non-tax and non-accounting folks, right? We work a lot with IT teams that don't have the appreciation for what is a tax requirement, what is the underlying tax rule. So to have that technology background and be able to speak the language of IT but understand tax, also really critical role to have as you're preparing for Pillar 2.
So one of the other challenges for clients now, and this has really came out, with the Safe Harbor document, the final Safe Harbor document that relies on country by country data now.
Yep.
And so, I think taxpayers, it really depended, but the country by country never resulted in a tax liability. It was an informational return. And now we have the standard called a qualifying country by country report, which I think frankly begs more questions than anything else to really understand what that means. But this is now kind of a whole other process in addition to setting up the books that are needed to compute globe income. There are many taxpayers that are going to want to take advantage of these safe harbors, and it's a transitional safe harbor, so it's only 3 years, and it only applies to those companies that meet one of those 3 specific tests. And so it may reduce some of the burden from the full globe income calculation, but then it requires, frankly, another process for country by country and making sure that country by country is kind of up to snuff, so to speak, as a qualifying country by country report. So what are some of your operational considerations that companies need to think about adding this now to the process?
Yeah, so I always hate to be, the bearer of bad news in these types of conversations, but I have a lot of conversations with companies that are of the mindset, hey, we have these safe harbors, we think we're going to qualify in several jurisdictions, so we can take our time in kind of getting things stood up for the full process. But actually, when you think about operationalizing, being able to take advantage of the safe harbors, and if you do, what that means, is your CbCR process as it stands today going to be qualified for purposes of these transitional safe harbors? What's the data that you're using to prepare your country by country report? And what's the timing of it? Most taxpayers I know are doing this as part of their compliance cycle. Well, with the transitional safe harbors, you either need to meet the tests and opt in the first year, or you're out, right, for the full 3-year transitional period. So thinking about if you're going to be able to get the data that you need to prepare that report earlier on in your full tax life cycle, and what does the process look like to gather all of the data to prepare the country by country report. In addition to that, if you do have jurisdictions that meet one of the 3 tests so that you do qualify for the transitional safe harbors, but you have jurisdictions that don't, you have to run the full globe calculation for those jurisdictions anyways. So now you have 2 parallel processes that you need to run. So I think it's really important to do somewhat of a cost-benefit analysis as well, where if you're able to take advantage of the safe harbors for certain jurisdictions where your data is a little bit more difficult to get, and you know that you have some questions with regards to the quality of that data, and you think you're going to need a little bit more time to get that stood up, it might be the path for you. But think about other jurisdictions where you're going to need to run the full globe calculation anyway. So you're going to need to gather the data. You're going to need to set up a full process. So again, doing that analysis and weighing your options with regards to how much benefit is it really going to provide us to take advantage of these safe harbors, perform an analysis, get an understanding of what jurisdictions you do qualify, taking a look at the data in those jurisdictions, and really thinking through, is this something that we want to look at and pursue, or is it something that's really not going to provide us that much benefit?
Right. And you can imagine if you're a multinational and you operate in a smaller number of jurisdictions and they're all high tax and you don't have any kind of the big incentives or some book tax differences, that you can imagine that, because if you could use country by country for all of them, it makes sense. But I think that what we're seeing for taxpayers big and small, it's like you're going to meet, for some, you're going to meet the transitional safe harbors, others you're not. So if you're already putting the process and you don't have a top-up tax, maybe you just do the full globe income calculation and not have to worry about the safe harbor, for example. But
exactly,
it's important for taxpayers to remember that if you're going to apply those safe harbors, you have to do it in the first year.
Yep.
In other words, you can't say, all right, I'm not going to do it first year and then do it the second year. You have to do it right out of the gates to elect into that. All right, so let's move to an ERP and enterprise system and some of those considerations, because I think, and we already hinted or alluded to this a little bit earlier, that, not all of the information is going to be within an ERP system. But what should companies be thinking about? What are you kind of seeing out there with respect to ERP systems?
Yeah, so we've really seen a whole range across the spectrum, and a lot of it goes back to, how involved was tax in the initial implementation or upgrade of the ERP system. Was tax there to give input on the legal entity structure? Was tax there to give input on what master data fields are required when you record a specific transaction? Did tax do a review of the chart of accounts to ensure that they were tax sensitized and that differing transactions that are treated differently for tax purposes are not being commingled? So for companies where we've seen, tax had heavy involvement in that, oftentimes the data is cleaner. You're able to pull a legal entity trial balance out of the system. You're able to, unwind and explain what some of the eliminations are and the top sides, and getting an understanding of the process as well for top side adjustments, consolidation adjustments. As they're being booked, are they pushed down to the legal entity level, or are they only being recorded on a parent and then they're pushed down in the subsequent quarter? So those are all things that now need to be considered for purposes of Pillar 2. And when tax was historically involved in the setup and configuration of the ERP, generally data is a little bit cleaner. But still, there's now the consideration of the difference between legal entity and constituent entity. So do you have data at the constituent entity level? Some of the fixed asset data that you need for your substance-based carve-out, right? Do I need to go now into a subledger system in order to really pull the details on that? And does it reconcile to my, chart of accounts, GL level detail? All of those things need to reconcile and make sense when you're actually putting the data through your Pillar 2 calculation. So they're all things that need to be considered. And I think especially master data fields, when you're recording transactions, intercompany transactions, making sure you have the affiliates tagged appropriately so that you can at least get an understanding of where those eliminations might need to be allocated down to when you're doing your Pillar 2 calculations, which didn't necessarily matter as much in the past, but it definitely matters now.
Yeah, what about those taxpayers that maybe aren't getting the information in the form that they need to from their ERP systems? There's a process to effectively kind of get a change order, if you will, to say, hey, we'd like to see that data in a different form. But that's a process that takes a significant amount of time.
Yes. Yeah. So anyone who's listening that's been a part of an ERP implementation or an ERP upgrade, it's not a matter of I pick up the phone and I call someone from IT and I say, hey, I need to get, a legal entity trial balance with tax sensitization built in. You could be talking about years, right? So this is a great time for any organization that's actually going through an ERP implementation or an ERP upgrade. You should treat Pillar 2 requirements as you would any other type of tax requirements. We're used to seeing, tax provide user stories and requirements around income tax, transaction tax, your foreign inclusion calculations, transfer pricing, so on and so forth. Well, now there needs to be a requirement section for Pillar 2 as well. And that needs to be part of any ERP program. And to the extent that your organization is not going through any enterprise system upgrades, this is where it's really important to get your IT team involved as early on in the process as you possibly can. Provide them with the education around what is Pillar 2, what does it mean for our company, why is it important for our organization, what's the actual potential cash impact of this, so that they're bought into the process and that they understand that there likely will be additional needs from enterprise systems. So that way you can work collaboratively between tax and IT to think through how can you solution for some of the gaps. If it's something that can't be configured in the ERP directly because there's certain configuration decisions that are made at the outset, and once they're made, you can't unwind them. Is there a workaround? Is there another report that we can build? Is there something else that we can design within the ERP platform that will get us the data that we need? And think through that optionality together so that you're working as a team. And also, I don't really know any IT people who are happy when, someone from tax tells them, hey, I need this tomorrow. It's not going to work.
Nobody
that
likes
way.
when somebody from tax calls, period. I think is
right.
the challenge.
Yeah,
we all know this from being in the industry long enough.
Yep.
All right. One last thing kind of on the ERP system, because I think there's some confusion with respect to technology solutions that enable your Pillar 2 process versus the actual calculation engine. And the calculation is going to be so challenging. We've talked about it on here. It's very likely, and the OECD has already acknowledged that jurisdictions have varying interpretations of QDMTTs, of income inclusion rules. These laws are going to be constantly changing. So it really is going to take a global team of tax experts to be able to do the calculation engine, because you're going to have to keep up. And there are 140 countries that I think have signed on. Obviously, the U.S. isn't signing on, and we'll see kind of the delayed. But listen, if 100 countries implement this, keeping up with all of those various nuances and then all the changes that are going to occur, because this is not going to be static, right? There's going to be law changes that occur. So doing the calculation engine is going to be, or doing the actual calculation is going to be very challenging. Talk about, again, how the technology solutions can enable the process versus the calculation engine, because I think there's been some confusion with respect to that.
Every time I have a conversation with a company, they always ask, what are the different software providers and the different software vendors thinking about with respect to their Pillar 2 solutions? And from what we've seen, and this is what I have been, trying to educate companies on, is the different software vendors are building in functionality into their existing tools and enhancing them to allow for additional enablement of Pillar 2 data gathering and calculation processes. It's different than a calculation engine itself because it is not a rules library or a rules engine that will actually take data, apply the rules as they differ in different jurisdictions to actually perform the calculation and then allocate the tax appropriately to the different constituent entities within a jurisdiction. So again, the software tools will help enable your Pillar 2 process to be executed, but it will not be that centralized rules engine or centralized rules library. That onus will need to be either on the tax team to actually keep up with those updates and come up with a process to perform the calculation and allocate it themselves, or take advantage of an actual rules engine, calculation engine, and with a centralized rules dictionary.
That's right. All right, so maybe last question then here. What have you seen, or any recommendations as far as success when it comes to readiness? What should taxpayers be doing? What advice do you have, or any success that you've seen from taxpayers and companies?
For sure. So I would say there's really two key themes that I've seen that have helped to enable different taxpayers to be more successful in their readiness process. One of them is over-communicate within your organization. Make sure that everyone up through the C-suite, everyone in IT, controllership, FP&A, legal, knows about Pillar 2, understands what it means and the impact on the company, and bring them along to workshops. If we're having a workshop where you're going to be walking through the data input catalog and talking through the applicability to the organization, bring those folks along so that they get that education and they get an understanding and appreciation for all of the work that's going to be going into this process in order to not only get ready for Q1 2024, whenever your first quarter that you'll have to report is, but also to help support you in the ongoing process as we move forward. This is not a one-time exercise. No. This is a process that will be executed multiple times throughout the year, and you'll need support from that wide group of stakeholders. You want cooperation. You don't want to be telling people things last minute. You want to make sure that they understand what their roles and responsibilities are and how everything will come together. And then I would also say just get started now, not only from the data readiness and systems and data assessment side, but also start running your calculations. We already spoke, extensively about this, but performing that operational readiness assessment and impact assessment in parallel so that you're seeing the real-time results of the data that you're feeding into your calculation engine really will help ensure, from a completeness perspective, from a comfort, from an accuracy perspective, that you're getting the results as accurate as you possibly can, that you understand completely where all of your gaps lie, that you understand in detail your tax profile and where you're expecting to have potential tax liability, so that you can also start thinking about some potential alternatives that are available to you. So really thinking about running the calculation as an iterative process as you're going through your readiness, data, and systems assessment.
Well, great advice, Kate. This was very informative. An area that I'm frankly shocked, kind of at this point of my career, that I'm as deep into, and I've learned a lot from you. I've enjoyed working with you. A really interesting kind of whole area of tax that and the operational side. And I think that many people, frankly, that have not been as involved in that, because you're going to have to know the rules as well as the data. And it's really, I think, not just for advisors, but taxpayers and everybody in the industry is really going to need to see both sides. So you've really done a nice job helping explain that. So thanks for joining.
Yeah, thanks, Doug, for having me.
All right. Well, thanks for tuning in to this week's episode of Cross Border Tax Talks. Thank you, Kate Miller, a director in PwC's Tax Reporting and Strategy Practice. I'm Doug McConey, PwC's International Tax Services Global Leader. Stay tuned for another exciting edition of the Cross Border Tax Talks podcast.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.